Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, in which we are going to review all the economic data as always, fundamental analysis, some earnings for Nvidia that are coming next week, and also performing technical analysis from top to bottom, from the weekly chart to the daily chart, to go into small time frames to see the details, and also going through all the individual tech stocks, dollar, and other correlations like small caps that are really interesting. First, economic data. On Monday, we got consumer inflation expectations ticking a little bit lower. That caused a little bit of very sentiment, but not too much. Everyone was waiting for Tuesday on CPI day. And as you already know, CPI data was pretty interesting, pretty decent, and it spiked the market. In terms of general inflation, headline inflation rate month over month came flat, coming lower from the 0.4 and decreasing from the 0.1 consensus. That's key. Beating market's expectations to the downside on the CPI, it's something pretty bullish. Inflation rate year over year, 3.2, coming lower than the 3.7 previous one, and also beating expectations to the downside from the 3.3%. In terms of core inflation rate, month over month, we got also a downtick, 0.2, lower than the 0.3 previous and consensus. And year over year, we are at 4%, also ticking lower from the 4.1 consensus and previous. So all these four readings were a check mark to the market to go nuts, basically. So Tuesday, we got that big spike to the upside that we are going to review in the charts. Really, really brutal. Wednesday, something interesting, the 30-year mortgage, it's flat, same as the previous one. The applications continue ticking higher. People is basically trying to gather, not the top, but at least they think that it's the top, so they are pushing their mortgages. The refinance index came also higher. People are trying to refinance into lower yields. So let's see. But the big number was PPI and retail sales. And this was also quite a surprise because PPI month over month came into negative territory. We were expecting 0.1 and we got negative from the 0.4 to minus 0.5. Pretty insane. In terms of core PPI, we got 0, also lower than the previous one and way lower than the consensus that was ticking higher. And in terms of year over year, we got on the headline 1.3, coming from the 2.2% and way lower than the consensus 1.9, and 2.4 in the core PPI year over year, also lower than the 2.7 previous and consensus. So pretty good PPIs data. The day after pretty good CPI, the market is hot. We are going to see that into the charts. You already know if you traded this week. But this is confirming that inflation is getting under control. Retail sales came a little bit lower than before, but we were expecting way deeper, way lower sales and more cool down on the consumer spending. In terms of excluding gas autos and the year over year, we got also a decrease, heavy decrease. So investors are starting to think about recession, no more than inflation, but basically they are turning their focus from inflation to recession. This was Wednesday. On Thursday, we got a lot of Fed talks and also initial jobless claims. These Fed talks basically were saying that, okay, the data is promising, but we have no cuts in the horizon because markets are forecasting heavy rate cuts into next year, starting in March. So maybe markets are pushing too much. So these Feds were saying that, hold on. In terms of jobless claims, also a spike in claims. From 218, expecting 220, we got 231. And also continued jobless claims, good data, more jobless claims, 1865. We were expecting 1847, more than the previous one. So another 2 ticks. This week was plenty of ticks to the upside. More Feds, Williams, Waller, Barr, Cook, Mester. A lot of Feds were aligned in saying, hold on into interest rate cuts. Let's see how this progress. We need more. And if inflation spikes due to holidays season, we may need to hike again. So they are not closing the door to anything. The primary thing is that cuts are not in the horizon for them, are not on the table. Finally, Friday, building permits, not a big number, but still going higher. And more Feds saying the same thing. So how the market reacted? We have the market expecting interest rate cuts as soon as March here, but the majority it's cutting in May. And from there, we have from the 525, so no more hikes this year. We are cutting 1, 2, 3 times. And this one. So 4 times to reach basically 425, 450 at the end of the year. So 100 basis points, 1% lower in 2024. That's massive. But we will have to see. I think markets are quite optimistic on the support that the Fed is going to provide in terms of interest rate cuts. I don't think we are going to be this aggressive, but until then, we'll have to see. And we covered the economy data, we covered interest rates, probabilities, and how the sentiment is right now. And I would like to highlight that in earnings, next week, on Tuesday after the close, we have Nvidia. And everyone is going to watch this one. The expectation is insane. And actually, Nvidia has been pushing this market. We are going to see how Nvidia is pushing because it's the last one, the last big tech company reporting earnings. And that's pretty much super important for the Nasdaq. We need to see big earnings and good earnings meeting expectations for the Nasdaq to hold these levels. And what levels are these? So let's start with the weekly on the Nasdaq. Well, 1, 2, and 3 weeks of insane performance. And look at where are we. We are not able to close there, but this is not bad news. Last week, I was highlighting this breakout, and I think this was expected, at least from my side, because look at where are we, 16,000. I mentioned in my last 2 weekly recaps, please check the last weekly recap because I put a video embedded in here with my forecast that I did down here saying this move, it's insane. We are going to see 16,000 into the end of the year. Well, the daily didn't wait, but let's analyze the move. This was Monday, USD CPI, PPI rejection, and then consolidation. So we are trapped here. And notice that I have this daily fair value gap that is holding since August, and we rejected pretty heavily. So we reached 16,000 psychological level and also the fair value gap, and we are consolidating. Friday was also a manipulative day. I'm going to explain why and the trade that I took that was massive. But let's first analyze the week. Monday, nothing burger, and then we have the push on the CPI. We have this huge 30-minute and also 1 hour, but on the lower time frames, on the 30-minute chart, that is in the one where I gather the most context, this fair value gap is holding all the week. But look at the price action. This was regular session trading hours on Tuesday. After all this push, we chopped around. On Wednesday, towards PPI, we tried to continue higher. We rejected the daily fair value gap and we moved lower on good PPI data. So this is not a fundamental driven market yet. This was too emotional, and right now it's quite technical. That's good for us. But look at this buy side liquidity at 16,049. We never went again to try to reach 16,000 throughout all the week. That's not weakness, but that's really a little bit surprising. We are leaving behind these kind of things. These are inefficiencies. And also the 30-minute fair value gap berries that I've been watching all this week. I've been watching this fair value gap because if we cross that, I think we were moving towards this liquidity and perhaps pushing the daily fair value gap towards the massive liquidity up here. There's a lot of shorts up here, let me tell you. And if you are following this channel, you already know that. So what was interesting? On Thursday, we chopped around like a maniac. But look at the 5 minute. Because when I was reviewing the charts during the afternoon, the first thing I noticed was this. This was quite a bullish chart into the close. This was the close. So I was watching on Friday since the London Open, pretty heavily trading, trying to find a good entry to hold for the entire day on pre-market. This was London Open. We established the London low and we chopped around. That was quite bad because look at this until the open. And into the open, we just flashed the London low, that liquidity, and started, look at the open on Friday. But let me explain you why I was looking for longs at some point down here. We have several liquidity spots down here. On the 1 minute chart, that's the one that where I took entries. We went down, up, liquidity. Let's extend this liquidity. Down, another stop hand down here. Notice that I have it down here market. Then push up, then a push down. This is a divergence with the S&Ps that was going lower. Then a massive dump and a massive response up here again on this liquidity. So two stop hands that were massive and also coming from this one into the open. Notice the 30-minute chart. Look at this insane buying pressure. I'm not looking for shorts, excuse me. I'm not looking for shorts when I see this on a higher time frame. There's no way I'm going to short this market down here. Maybe I got stopped out a couple of times, but the good thing is that after I took a little scalp up here after this bounce, I didn't take this one. I was quite surprised, and I think, okay, you lost the trade, because I was certainly thinking that we were going to push this. And then I had an order down here. I had it, I think, at just a couple of points down below this. That is was 28. I had it at 26. The low here was 25. I got fill here. I got fill here at 26, and I added here after watching this hammer candle 2 contracts each time with a tight stop down here, and I got 4 contracts running until where? Well, you have it easy, right? I was looking for the leverage a little bit at high of day, and the next one at this high. So I took this massive trade from here to here. My average was down here with 4 contracts towards here and towards here. That was almost $3,000 waiting for the market to really trap more shorts. One thing that you have to think about, if the market wanted to dump, they are not going to do these kind of things. If they want to dump it, they just dump it heavily, as we've seen in the past. I missed the liquidity up here. If we check the 5-minute chart, this was the massive liquidity that they were trying to gather. They did it, and then they flashed again the market into the close. Look at this massive dump. So I was out here, and it continued higher and higher, squeezing all shorts that were trying to short this market down here and all over the place. So this was my trade, and again, overall, this market is not super bullish, but it's holding like crazy. Look at this. I want to see the open interest on Monday, to see the open interest on Friday when they report it. And if I see again tens of thousands of open interest in the NQ and on the ES, I mean, they want to continue pushing this market towards basically year-to-date highs up here. But all depends on Nvidia. We are going to start with Nvidia on the individual review, because Nvidia it's doing a massive push. The previous earnings were here, and the next earnings are here. Look at where are we. Nvidia has been pushing towards the upside like crazy, fueled by AI as always. Also, Microsoft has been pushing this market like crazy. It did new all-time highs after new all-time highs. 1, 2, 3, 4, 5, 6. I mean, it's been doing all-time highs all this week. And we finally stopped on Friday. But Nvidia is going to report earnings, as we mentioned before, on Tuesday after the close. And if it reports good earnings, 500 is going to be destroyed, and the Nasdaq is going to jump, most probably up here. So watch the market. Watch how it behaves in these liquidity spots that are on the path towards that year-to-date high. If we continue holding these levels and this liquidity down here, it's like this, prepare, because market makers are going to trap a lot of people towards that final push towards 16,100. Let's now with a quick review of the individual tech stocks. Apple is trying to hold up here at 190. It filled the gap here. it now is retracing. It all depends on Nvidia, truly, honestly. Microsoft, I mentioned that, all-time highs after all-time highs after all-time highs. Microsoft is riding the wave of AI with Copilot, with new add-ins, now new chips. Come on, Microsoft is killing it. Tesla, more pressure with the strikes in the horizon. It partially filled this gap and then push higher. That's quite bullish. Because as you can see, it was dumping and then did the typical V reversal. And also Microsoft was quite weak throughout the day. And then when this happened, I knew that NQ was going to at least arrive to some liquidity up. So down here was on the NQ at this time. It's when I took the trade on the manipulative down, fake down on the NQ. Amazon, remember, Christmas holidays, it's in everyone's mind. And Amazon is certainly pushing new highs. Look at this. We are at a level, at a critical level. If Christmas consumer spending goes well, this is going to break. Google, well, is dealing with a little bit of frustration with the AI. It's trying, but I mean, it's doing good, but this pivot, the up here, it's really critical. A lot of resistance. Nvidia, we mentioned that. Prepare for all-time highs if earnings are good. And Meta, it's quite choppy up here. Up, down, up, down, up, down. It took this pivot. It's basically holding. And let's see if it has more in the tank towards this level up here that is massive from 2021. Investors are going to take profit up here after all this massive run. So watch out. So this is the overall performance, the NQ, what I'm expecting. Remember, there's liquidity to the upside. Nvidia can fuel this massive short squeeze for a 4th week in a row. This zone is going to be profit taking zone. So I don't think we are going to see it. So if we reach these levels, take profits, because we are on a massive bull run on the daily chart. We have some resistance, some value gaps. Be careful up here. Two things that I want to mention before closing. Dollar is basically helping the stock market to go higher by doing bear flag after bear flag. I think we are going to see this move next week. Third leg down, maybe a push, a nightmare for all the people holding longs down here. And I think this is going to be pretty good demand for the dollar down here. And we'll see how the stock market behaves down here, because when dollar is strong, stock market is weak. Now that the dollar is weak, stock market is pushing higher. Small caps. Look at this spike. This was on Wednesday, PPI, rejection. That's why none of the equity indices could hold. So we are going to remove this and put a pivot on close, because this is going to be quite massive. Actually, I can put it here. So we want a close up there. This is gone, and we are basically watching this gap towards the bounce. If small caps if the Russell 2000 is strong, it will help a lot to the S&Ps and a lot to the sentiment on the overall indices. This is the S&P daily. We are holding CPI number. We are consolidating up here, and there's liquidity just right here. On the 30, let's go to the 1 hour. S&P is a little bit different. It's holding two fair value gaps on the 1 hour. But we have this insane resistance up here. So let's remove this. So this is the status. It's holding these levels. If small caps are strong, if dollar continues a little bit lower to the support that I targeted, and Nvidia puts nice earnings, we are going to see this on the S&Ps. We are going to see this on the Nasdaq. And we most probably would like to see a break of this week on the small caps. So watch this setup. I'm still quite bullish as long as we hold this zone down here. If we gap down, for example, on Monday ahead of Nvidia, and we start to see market on the 30-minute chart approaching this liquidity down here, I'm not going to take a long down here just with blind eyes. I want to reclaim this zone, not to continue lower, obviously, and then I can see if we reclaim these wicks, and just this is the liquidity grab towards this massive move. But this is going to be tricky. But the first thing that I would like to see is this zone, 15,860 holding. And we'll have to see, but the setup is there. We are massively bullish, but we are starting to see signs of bears appearing on technical setups. So the only thing that we can expect is earnings to be good, dollar to continue weakening, and small caps to really push harder and support the move on the Nasdaq. And that's all from my side. As always, if you found this video useful and this kind of weekly recaps, please give it a like, support the channel by subscribing, because I put a lot of effort in these videos and on my daily videos on regular trading days for market forecast, market updates, and market recaps. I appreciate your time as always. I hope you had an amazing trading week. I certainly did. And I'm looking forward for next week Nvidia, because we can see continuation. But remember, risk management, patience for your setup, and be disciplined. Remember my setup. I waited 2 hours to this setup, and when I saw it, I just put in size and just let it run to my partial or final price targets. That's the best way you can trade. And that is going to provide you need confidence, you need experience, and you need, of course, risk management. Manage your risk and you will be successful. Stay safe, everyone. Have a nice weekend and see you on Monday.